Hey everyone, and welcome to Talk ETFs, ETF.com's weekly video series. My name is Sumit Roy, and I'm Senior Analyst here at ETF.com. This week, I'm speaking with Zachary Aronson, who's a portfolio manager at MacKay Shields. Zachary, thanks so much for being on the show.
Thank you for having me. Appreciate it.
Absolutely. So, Zachary, it was about a year ago, 11 months ago, that you launched your ETF, which is a securitized income ETF with the ticker symbol SECR. Can you walk us through how the fund has performed over the past year and why it makes sense to have an ETF like this, which invests in structured products like mortgage-backed securities and asset-backed securities?
Sure. Year to date, the fund has performed quite well. I believe it's the top 10% in the peer group. So it's been a good start to the year. I would say securitized products like mortgage-backed securities, commercial mortgage-backed securities, and asset-backed securities offer compelling yield and diversification characteristics. They are often underrepresented in traditional bond funds, but with SECR, we saw an opportunity to bring institutional caliber structured credit exposure to the ETF space in a format that's accessible to a broader range of investors. Many fixed income ETFs are heavily concentrated in treasuries or corporate credit. So we wanted to offer something different, which is a core bond solution with a securitized backbone that historically has had lower correlation to equities and corporates.
So, Zachary, this is an actively managed ETF. Most investors in ETFs, they're used to passive index-based strategies, particularly passive strategies that target traditional bonds and things like that that you see in the Bloomberg aggregate. Can you tell us why active makes sense for this ETF in particular and fixed income in general?
Yep, you're exactly right. I would say structured products are incredibly diverse. So the complexity doesn't lend itself well to a rules-based index. Active management lets us be selective. We could adjust exposures across sectors, coupons, or deal vintages in real time. And during volatility, we're not forced to follow an index down. We can shift into higher quality tranches, move up in the capital structure, or even lean into mispriced opportunities. And that flexibility has been key in managing risk while also seeking to capture upside.
So, Zachary, a lot of investors, they're not that familiar to structured products. They're used to traditional bonds, things like treasuries, things like corporate bonds. How do you make this ETF that you have more accessible and more understandable to the average investor?
Yep. We designed SECR to be a single ticker solution, so investors don't need to pick and choose between MBS, CMBS, or ABS themselves. And ultimately, we want investors to understand why the fund is positioned a certain way and how that ties back to macro trends they're already familiar with, things like mortgage rates, consumer credit, and commercial real estate.
And can you talk about what the fundamentals for this segment of the fixed income market look like right now? How does, housing demand play into it? Things like mortgage rates, refinancing risk. Can you talk about that?
Sure. So we've typically leaned into seasoned residential mortgage-backed securities with attractive yields, and we believe they're more insulated from an economic downturn. There's also quite a bit of mispriced CMBS bonds backed by what we consider higher quality properties that may be a little more misunderstood by investors. And lastly, we have exposure to a diversified portfolio of asset-backed bonds, where we consider those to have strong structural protections. And of course, we manage exposure daily to the yield curve and duration.
How about the macro? How does the macro impact this ETF? Obviously, there's a lot going on right now with regard to inflation expectations, with regard to credit spreads potentially widening out. How would those things impact this ETF? And secondarily, this is a floating rate instrument. Is that correct?
We have a mix of fixed and floating. There is a duration in this ETF.
Gotcha. And what's the duration of the portfolio right now?
It's about 5 years.
Okay, gotcha. And do you have a take on, what's going on in the macro right now? Obviously, a lot of uncertainty. Everyone's trying to predict, but what's your take and how do you see that impacting this ETF?
Yeah, of course. We watch credit spreads, consumer data, and the Fed signaling very closely. A Fed pivot could drive spread compression and price upside, but it could also signal rising macro stress, especially in employment. So if unemployment rises meaningfully, you'll see pressure across consumer ABS and housing-related assets. That's why we build the portfolio with risk management in mind. We seek to protect from those downside through structure and seasoning, not just yield.
Fantastic. Well, a ton of great insight, Zachary. Thanks so much for your time.
Thank you for having me. Appreciate it.